Thank you everyone for joining. Hope this will be a productive session for everyone. So today's session is primarily around options and how you could use the capability that exists within P.H.I core to basically place the correct kind of option orders through to any of the brokers that you want to. Before I get started, I think one of the feedbacks that we've received for other webinars that we've done is that we don't really get to the basics first, and then we straight away jump into strategies that might work for different scenarios. So what we'll do is we'll take a more leisurely approach. We'll take the basics around options first, just to clarify any doubts that anybody may have. And then, of course, if there's any question whatsoever, we'd like to keep this, we'd like to keep this interactive. So keep posting anything that you think you would want us to talk about, any questions that you want answered in the chat, so that we can gauge and understand if everything's understandable to the audience or not. So I hope my screen is visible to everyone. Neeraj or Alex or somebody.
Yes, it is visible.
Yeah,
yes.
great. Perfect. So let's get started. So options are essentially an insurance instrument. Okay, so like you would buy insurance for any event that you didn't foresee, you could buy insurance for any of the instruments moving in any direction that you did not foresee or did not have positions for. So let's assume that you are an investor, because we're going to start with basics, and you have long positions on multiple instruments. One very obvious thing to do is that you should protect against downward movement on the market as a whole. So what you can do to that effect is just buy this insurance, which is called a put option, right? And what this would do for you is that you are paying a premium, which is why it is essentially, it's called premium, not price, for options, because that is the price that you pay for having the right to exercise this option at any time that you want. So you do pay a premium, which in this case is 6550, right? But if the market does end up moving in the downward direction, as an investor, you don't want that, right? So if the market does end up moving in the downward direction, your upside is unlimited, tied to the amount of move that Nifty ends up having in the downward direction. So essentially, if you are an investor, this is something that you should definitely do, or at least look at in terms of protecting your account, essentially, in case something happens which you did not position for. And then the opposite side of the equation is also there. So let's say that you are shorting something, right? In other words, you would not want the direction to be, or the move of the direction to be positive, right? One very simple thing you could do is buy, instead of buying a put option, you could buy a call option. In which case, of course, it's the same as buying a put option. You do pay a premium, but the payoff, is positive in the if and when the move is towards the positive side. We do our best to give you, the numbers around break even. We do our best to give you the numbers around what your max loss would be, your max profit would be, regardless of how many kinds of options you are buying or selling, right? So now that we have the basics of options out of the way, any questions that you guys have on just the basics of what are options and why you should sort of look at these instruments and place trades in this? Anything that you want us to cover further on the basics of options? And Neeraj or somebody from marketing, or Ismail, if you're there from the support team, if you guys can help me with the chat.
Yeah. So basically, there is one from Arvind Nair.
and he says, can you show some basic strategies based on trend?
Based on trend. Okay. Yeah, absolutely. So we'll get to strategies. I think if the basics are clear, I think the audience wants us to move forward. So we'll do that. So now let's say we go
Abhigad,
to
Alex here.
yeah.
There is an interlinked question there from another person, Mr. Dharminder. So for him, the basics aren't clear for him.
Great, great, perfect, perfect. Okay, so I'll move forward very quickly. So let's say we go to something like a trading view, right? And we say that we've developed some sort of an opinion about some instrument. And let's say the instrument that I have an opinion about is TCS, Reliance, whatever, right? In that case, what I can do is I can go back to my 5-1 dashboard, right? The options page. And if my outlook is definitely positive, the simplest thing that I can do is buy a call option, right? If I want to position through options, in which case, as long as Nifty expires, Nifty currently is 18,349. If as long as it expires above 18,566, I'll be having a positive outcome. The expiry, of course, will be at the end of the month, depending on what kind of option I've used. I've used monthly in this case. So that is the simplest, thing that I can do. But let's look at a few other options in terms of what else I could do. So let's take a look at, let's say, um, a bull call spread. So a bull call spread would be something like this. Just 1 second, let me find it. Bull call spread. Yeah. So bull call spread is you are buying one lot of the ATM, and then you're selling one lot of any strike above the ATM, and you are doing both with calls. So you're buying a call and you're selling a call. In this case, you get a very clean sigmoidal. We basically in the statistics world, this is called a sigmoid curve, where there's a very small gap between the highest value at the positive side and the least value at the negative side. But your maximum profit and maximum losses are both already sealed. You cannot exceed those as long as you're able to place this position. So in this case, if I place this trade and Nifty expires, let's say above around 18,400, I'll be trading positive. And if Nifty expires below 350, I'll be trading negative. So this is something that you could do for very minimal margins, because you are buying one and you're selling one. And the good part about this strategy would be that, of course, the risks and the returns are both capped. So it's not like you're going in blind in terms of what are the range of possibilities that can play out. So that's one option. The other thing that you could also do is something that we call, let's say, a butterfly. So let me just give you an example of that. I think this is the one. Yeah. So let me just, in fact, just refresh this page once so that I can load this. So in this case, we are actually we would be, if we go with this strategy, we'd be placing 4 orders. We'd be buying puts, right, below the current at the money. We'll be buying calls above the current at the money, and then we'll be selling 2 lots each of calls and puts at the money. And then your return would look something like this. In this case as well, since you are buying and selling, some of the premium would be offset by the premium that you receive when you're selling options. But overall, since you are buying more lots than you are selling, your overall max loss is capped. And the max loss in this case is 13,365. If there is a range and the break evens are in front of you. If the price does end up expiring between 17,982 and 18,383, you would incur a loss. And the same would be between 18,616 and 19,017. But as long as either Nifty expires between 18,383 and 18,616, you would make a profit. And the same happens if there is a large move in the downward or the upward direction. So as long as it expires above 19,017 or below 17,982, we'll be making a profit. The good part about a butterfly is that the losses are capped, while this particular butterfly, your profits are not. And that is due to the kind of legs that we're buying and selling. In terms of Greeks, you are overall, I believe, delta negative. But yeah, you can look at all the Greeks on 5-1 as well. And if you want to look at the P&L leg wise, you can do that as well by just expanding this and looking at your overall scenario that you see playing out. So this would be a very good strategy to deploy if you are, let's say, of the opinion that there will either be a very large move, in which case you are anticipating a highly volatile scenario. You could use this. If you think if you think there is going to be a single-sided move, or there might not be any move at all, you can play this as well, because again, if the Nifty does not move too much away from the current price, you would still end up making a little bit of money, right? But of course, there is this range where you are negative, and you should be aware of that. Overall, I think the point that we wanted to stress on, even in the last webinar, and then we're saying the same thing today, you should not be selling options only. Most of the brokers may not even allow you to do only selling of options, and the risks are immense. The downside risks are huge, and I'd like to show you what happens if you just sell an option. So I'll just refresh this page once so that everything is cleared out, and show you what happens when you just sell a call, let's say, or let's say sell a put. Let's see what the payoff looks like. While you would end up making a little bit of money if the price is expiring at the current price, your maximum losses are infinity. In other words, you could have one bad event and one bad trade, which could end up wiping your entire account, not only your entire account, but your entire profits as well. So just, that's one thing to be careful about. Do not purely sell options. That's highly, highly risky. And we definitely urge you to not do that. Okay, so we've looked at a couple of things. We looked at, let's say, a bullish position, right? So we looked at a bull call spread. We looked at butterfly, right? So that would be if you're anticipating a huge move either on the upside or the downside. One other thing that you could do, if you think there is not going to be a huge move in any direction, if you think it's going to remain largely in the range that it is currently, you could also use something called a long call condor. And the payoff is really simple. It is capped on both ends. It's capped on the upside as well as the downside. So if the Nifty sort of expires largely in the range that it is right now, you would end up making money. The break-even points are 18,269 and 18,530. So as long as Nifty expires between these points, you'll end up making money. But if it does not, your risks are capped. So it's never going to be beyond a certain maximum loss, which is the good part about this position. So in terms of scenarios, we covered a bullish scenario, we covered volatile scenarios. So we looked at butterfly for volatility, and this would be an oscillating type, oscillation type scenario, which you could use, which is a long call condor, where you are essentially selling two lots of calls close to the ATM, and then away from the ATM you are buying two lots of calls. So again, you're not selling more than you're buying. It's equal, so you have a clear capped profit and loss depending on where Nifty expires. One, of course, there is a simpler strategy as well, which only involves buying. So depending on which broker you're talking about, if you're not allowed to sell, there is one more thing that you could do for volatile scenarios, which is just to buy a call and a put at the ATM. It's also called a straddle. So what we're doing now is we've bought a call already. Now we'll buy a put. And as you can see, they're both on the ATM, and we can look at the payoff, which is something like this. So there is a big range. There is a range in which you won't make money, but as long as there is a large move in either direction, you will end up making money. This is purely buying, and there is no selling involved, which is, of course, there is a little bit of hassle in getting brokers to allow you to sell options. In terms of how difficult it is to place orders, we're all aware. You need to key in all the tickers individually when you're going into your brokerage account, and you need to select the right expiry. Sometimes people end up making mistakes on those, and sometimes some of the orders are fulfilled, others are not. So to alleviate that pain, to just make life simpler a bit, we also have this place order button here. So as soon as you click this, if you're integrated with any of your brokers, the tickers are selected for you, the expiry is selected for you, the quantities are already put in, and all that you basically need to do is press this place all orders button. What this does is it not only places all the orders together, it first places the buy orders and then places the sell orders, so that if your broker does not allow you to sell options without buying them, you can, of course, take advantage of the fact that you are buying. And the other thing, of course, is also that if some of the orders do not go through and do not get fulfilled, we try our best to roll back or cancel the positions that you already have, so that overall your P&L that you have at the end of the month ends up looking very similar, or exactly the same as what you see on the chart here. So most of the differences from what you see on payoff charts versus what ends up happening is largely due to either time differences between when you placed one leg order versus the other, or it's because some of the orders didn't get fulfilled at all and maybe you weren't aware. So yeah, that's the execution side of things that I wanted to sort of touch upon. And as far as the algo side is concerned, you have seen our algo related capabilities in other webinars, and I'm sure we will touch upon those capabilities in the future as well. This webinar was primarily focused on the options side, where we show you low and medium risk but not high risk option positions that you could use. One thing that I do want to mention is that if you select something like a Nifty or a Reliance on the create strategy page, not only do you have the ability to buy or sell, but you also can place option positions, right? So butterflies, bear call ladders, bull call ladders, and everything based on technical analysis. So if I only want to trade a butterfly if the volatility is high, so I can put, let's say, an ATR confirmation on it and put a number. If the ATR is above a certain number, only then do I want a butterfly deployed. Otherwise, I want to square it off. So I can put all of those technical conditions in and trade based on that instead of just buying it outright, which you could do from the option positions page. So I think there should be some questions at least. So just help me out, guys. What direction do we want to take this in further?
There are several
Yes.
questions.
Sure.
I think Aditya, we've answered, but still, yes, show some entry based on indicators and trailing stop loss. And Mr. Dharminder, please show some non-directional strategies like calendar spread with adjustments and stop loss. And Arvind again is asking on modulate strategies if they're not showing good P&L. Can you explain the risk management features on this platform?
Sure. So I'll start with the algo side questions, maybe.
Yeah.
So how do you modulate strategies if they are not showing good P&L?
Mhm.
So the first few things to do, of course, would be to look at confirmations. So are there a lot of negative trades versus positive trades? Even though you might be overall positive, your brokerage might be eating up on your P&L. So try and reduce the negative trades. Um, some of the examples that we've seen out there are, let's say, confirmations around if you're looking to go for a positive trending strategy, look for a close greater than, let's say, an SMA of 200. That would be a good indicator of an uptrend happening on top of whatever event you're already tracking. So let's say you're doing a Bollinger Band based strategy, right? And if you're going long based on a Bollinger Band, try and add a confirmation of close greater than SMA 200. That would be one idea. Of course, it highly depends on what you are exactly trying to do, but that's one one thing that we do suggest is just add confirmations to reduce the number of negative trades that will eat up in your brokerage. In terms of risk management, yeah, so we have in the core platform, which is the one that we are seeing here, we have stop losses and take profits. These run tick by tick. So even within the candle, if the stop loss or the take profit gets hit, your trade will get squared off. So this is implemented with a bracket order internally, and that bracket order is running on the exchange. So the first order goes as a limit order, and the take profit goes as a limit order after it. And also there's a stop order on the stop loss side that's also running. So yeah, so those are the major risk management features on this. In terms of, I think there was a question around calendar spread. So calendar spread, you can look at things like you know I believe you would get good references around Investopedia around what you could do. But in terms of using calendar spread, you are basically trying to use, I think somebody's drawing on the screen. So you could, instead of buying the current month contract, you could buy something else. So maybe a calendar, a month in front of let's say T2 or T3, instead of just having positions on one. So it's difficult to visualize with this kind of a UI, but yeah, I mean that is something that you can play around with and try to deploy as well. Most of the calendar call and calendar put strategies, as well as diagonal call and diagonal put strategies, are largely to let's say take advantage of oscillation type scenarios where you're not anticipating any large moves in directions, but anticipating the move to be fairly small, if at all. So those would be non-directional strategies. And one of the ones that we talked about today is also non-directional, which is long call condor. So again, if you're not anticipating a huge move, then you could use something like a diagonal put or a diagonal call, a calendar put or a calendar call, or something like this, which is a long call condor. Anything else that we can talk about?
Somebody has asked whether 5-1 supports equities also.
So
Equity.
5-1 does support equities. we are anticipating that MCX will launch as well soon. We'll keep you updated on when, but yeah, we're looking at launching MCX as well, MCX support as well. But today it supports equities and its derivatives. So futures and options. On the backtesting side, interestingly, we also do continuous futures. So if you want to look at the current month contract and the data stitched back in time so that you can backtest on just the current month data going back through history, which is what a continuous or futures contract is. You can backtest on that as well. Any other questions, guys?
I guess we covered all. And the last question for adjustments through Algo. And there's one latest one is, can it take buy sell signal from the trading view and connect for doing algo trading on your platform?
Can it take by? Okay, so in most of the things that you can do on TradingView, and there are a few things that we can do that TradingView won't. You can do here. I just showed the form-based builder. It's a really simple builder. And if you think there's anything that this platform cannot do, because of course the form mode does not do everything, do connect with us because we do have other tools that help us do that. But if you've already built something on TradingView and it works, I think you should look at directly connecting it to your broker. I think there was another one that you mentioned, adjustment on algos.
Yes. How can we do adjustments through Algo? And Aditya's question on trading stop loss is asking show some entry based on indicator and trailing stop loss.
Okay, so trailing stop loss, sadly, on the core platform does not exist today. We do have it in the elite platform. So, in one of our, if you want to schedule a demo with us, you can do that and we'll show you the elite platform as well. And then there was an adjustment question, right? So how can we do adjustments on algos, right? So adjustments on algos, I'm assuming that you're talking about editing something that pre-exists. So I'll just show you how that would look. So this is one strategy that already exists. Maybe I can select one from my account. I have a few. So let me just take this one. So, this strategy already exists. Now, since this is a buy strategy, if I want to add a confirmation of, the exact confirmation that we were talking about on the webinar earlier, which is close greater than SMA 200, I can do that very simply here. And if I want to save and backtest, I can just click save and backtest here. So this will try and go and basically run the backtests again. I don't know in this case if it makes it better or worse, but this is one bit that you can try out in your strategy and see if it works. On that point, I also want to show the discover strategies page. So these are templates that are pre-built for the retail end of the market to get started with. And there are strategies that are buy based, that are sell based. There are a few that are option based as well. And anything that you think does not exist here. So if there is a favorite indicator that you have, you can always go into create strategy, just add a few instruments, right? And let's say I want to buy, and I want to buy when the RSI, I'm just thinking of a very simple strategy. So RSI less than 30 and my close is above the EMA of 200. I'm overall trending positive, but my current RSI is oversold. I want to, let's say, do a 2 and 4, extremely simple, a very, very simple strategy. Again, I'm not sure if this will work or not. And I'm just showing you guys how to build this. So yeah, so we created a strategy that takes in RSI, adds a confirmation that I only take trades when the close is above the 200-day moving average, exponential moving average in this case, and then buys when the RSI is oversold, and then puts a stop loss of 2% and a take profit of 4%. So as soon as it completes, you'll have the P&L. But yeah, now you can basically, whenever it pops up, you can then go in and tweak it further, add more instruments and things like that. Anything else that I can, wow, that was not expected. So this is only the last 2 months. So maybe we caught a trade that's great. But yeah, overall, we had 2 signals and interestingly, both were positive. Not to say that this is a great strategy or you should run it, but this is something for you to, let's say, try out. Try back testing this on multiple different instruments and things like that.
Arvind Nair is asking why there aren't any charts available.
Charts. Okay, so I mean, I think the same point that I made earlier. So the core platform is only for form-based strategies and options. We do have charting related products. So the Elite platform, for example, does have charts, does have scanners, does have code-based strategies. So beyond just the form mode, you can go for you can write code, very, very detailed code for any custom indicators that you want to write and things like that. So and you can take advantage of multi instrument time series. So if you want to analyze Nifty and then deploy an equity, you can do that. You can look at multiple different time intervals. So you can take confirmation from the day chart and then run it on the 15-minute interval for let's say your events, your orders, your trades, and many other things that you cannot do here. The reason why we kept core simple is because most of the people that we were talking to wanted a simple platform for them to run, technical as well as candlestick based strategies. And they had an opinion and they wanted quickly to deploy options easily, but they weren't able to. And we thought that this filled a different kind of gap. And therefore, we have this core platform as well.
Yeah. So, Mr. Arvind, I could read out your questions actually to Aviral. So basically, we do have these capabilities in terms of the charts that you're asking for. Baumik Meher has left his contact number. What you can do is you can speak to us on this separately. So we'll be able to take you through why not that was there in this core product and why it is only in Elite, and the pricing and all of that would be discussed there. Thank you.
So yeah, guys, if there are any other things that we can cover, do let us know in the chat. And if there's any other things that are in the chat that we haven't covered so far, do let me know.
Any other questions that we have not covered, you can retype it or may ask now.
All right. So I think let's just summarize. And of course, you all always have the option to go to our website and schedule a demo. If you want to have an individual session, you can do that. The pricing is pretty, you do get a 15-day free trial for anything that you want to check out within the platform. The other thing is we do roll out videos and blog articles to help you very quickly. We do have a documentation page. If you get stuck anywhere, you can refer to this. So let me just show you how that looks. That's docs.51.io. And you have everything from 100 plus indicators and multiple different candlestick patterns that are already pre-created for you, which you can leverage to create your entry exit positions. So let's just take a simple example. So this, if you put this, and you can copy it from here as well, just clicking this button, copy it. You can take this and take it to your create strategy page and then just paste it here, which essentially takes your, if you're interested in high wave, you can just say that whenever this is true, this becomes your entry, and you can add as many conditions as you want as confirmation. So yeah, many of these, well recognized candlestick patterns are already pre-created for you, so you don't have to code each and every condition in that. There are these conditions around, there should be 2 green candles and then there should be a red candle. All of that programming is already done for you. You can just copy and paste these conditions from here to your create strategy page. And of course, we are available for support as well. So we have an email support as well as support on chat, which you can access live on the platform. So hopefully you will find some value out of the capabilities that are in 5.1 today. Of course, we're rolling out more and looking at more capabilities every day. If you have any feedback for us, do reach out to us. And yeah, hope to see you around. Thank you so much. Happy trading and a happy weekend.